Hello nephews, hello nieces, welcome to my YouTube channel. This is your uncle, Uncle Charters, the uncle of stock trading. And today the S&P 500 recaptured the 200-day moving average. Is this a false breakdown scenario? We're going to talk more about that, and we're going to not just talk about price action, we're going to talk a little bit about Elliott wave stuff. I got a little thesis. Stay tuned, keep watching for that. But first, take a look at the flow sentiment backed by popular demand. Okay, I stopped showing it because, well, the flow option for SPY was like always bearish. Okay, wasn't very helpful. However, this is the flow sentiment for the overall market. Okay, stocks only, meaning no ETF, just stocks only. 200K premiums or above, and for the overall market, 58% in call. So big money is more bullish than bearish for the overall market as far as stocks go. Okay, not ETF, not crypto, not forex. Okay, seen a lot of calls for this BRCC stock though. 21,000 call contracts, literally no puts for this BRCC. I'm not sure about that stock. I might check it out later. But anyways, this here is my Discord, 7:01 a.m. right here this morning. I woke up nice and early to give the plan to my Discord members, so when they finally wake up, they can wake up to the plan and see what we're gonna do. Anyways, so yesterday SPY lost the 200-day moving average and went and tested the 444.5 to 445.3 support zone. Okay, 50% retracement level, also around with 20-day moving averages. This area was critical because, well, what I just said. 50% retracement level, 20-day moving average, and managed to close above it. All right, as of writing this, SPY is at 447.77. Mind you, it was at 7:01 a.m. SPY ended up closing well below that. So bull case, if SPY opens above the 200-day moving average, 447.5 to 448, or if SPY is above that level, that is bullish and puts the 450 to 451 resistant zone in play. So resistance zone as in the range. Anything within that range, that's the resistance zone. If cleared, 452, then 453.5 bullish above, back in play. Okay, those are the upside targets. If 450 to 451 resistance zone cleared, I was eyeing 452. But here's the bear case scenario. If SPY opens below the 200-day moving average, 447.5 to 448, 444.5 to 445.3 is back in play, and then below that was 441 to 442 zone. That's where the 50-day moving average was. Okay, so I'm not about, your Uncle Charters is not about seeing the future or anything, or forecasting, or trying to be Miss Cleo, Uncle Miss Cleo. That's not who I am. I just identify the possible scenarios, and we just simply react to the price based on price action concepts. Okay, guys? So, that was the plan. And we look here. This was the open candle for today. SPY opened at 445.59. So, it opened below the 200-day moving average, okay? So this means we're going to be watching the bear case scenario. What was resistant? Resistance zone was 447.5 to 448. I gave it a zone based on the 200-day moving average. As you can see, right at the open candle, all right, it came and tested our support at 445.3, 50% retracement level. Bounced right off that, rejected right from our resistance zone. Next candle, chopped a bit, went back and tested our resistance zone once again. You can see the wicks right there, okay, and right there. Rejection from resistance zone. That's why we short from resistance. And from that resistance zone, SPY dropped all the way down to our support zone, level to level. And here's where it got tricky, okay? Because like I always say, you want to get bearish, either short from resistance or wait for support to be lost and watch for that back test. Now this candle right here, the 11:15 candle, it closed at 444.47, below my 444.5 support. So we had to watch for the back test, and here we go. This, another close below, okay? This, another close below. Here's where it got tricky. You notice despite it was below support, you notice the wicks under it, signifying buying pressure, okay? And then what happened on this candle? 12 noon, it recaptured 444.5. So that put 444.5 right here it recaptured 444.5 and put 445.3 in play. That was a mouthful, I had a tongue twist, okay? Obviously, after recapturing it, the very next candle, it closed below it again, putting our downside price target in play, okay? If 444.5 failed, 442 to 441 was in play, okay? So right here, closed once again, false breakout scenario. This candle right here gave us a nice rejection. You can see that. Gave us a nice rejection. It's telling us, pretty much confirming, hey, there's the back test as resistant. You lost the support. We should be heading lower. Technically speaking, on the very next candle, we did go lower. This candle right here went as low as 443.5. Okay? Here's the thing. You notice that wick on the bottom? A long wick on the bottom, signifying buying pressure. And then when you look at the previous day low, very close to each other. Right there, right there. Double bottom, okay? That's still not enough for me. Recaptures are bullish because recaptures are false breakdowns. And as you can see here, after this green hammer candle, the very next candle, we got this big body green candle crushing right through our support zone. At this point, because it came from the bottom right here, it crushed through the resistance zone, clearing it. Okay? That's a recapture. Recaptures of support are bullish because it's a false breakdown. One of my favorite trade setups. Okay? Still, nonetheless, very tricky to trade. But from there, it came to this yellow line right here that I got some intraday resistant, broke above, came to our resistant. Okay? That's the green zone. Testing the 200-day moving average again. Now, the last couple days, as you can see, every time it came to resistant, it rejected. Some false breakouts, but ultimately rejected. Okay, you see? However, this time when we came to this resistance zone, I noticed something. I noticed the lack of selling pressure. Not like it was the other times. The other times selling pressure was strong. But today, selling pressure was weak. Yeah, I think I alerted the group. Oh, right here. All right, around 240-ish. Be careful here. SPY look like it's basing under resistance. This usually favors the upside. Okay, just letting the group know. And you see the chart when I posted. Right when I posted, this is the picture, the screenshot I took of the chart. Letting the group know, guys, even though we're at resistance, and this is usually where we short, we're basing right under it. This usually favors the upside to build strength to bust through. And sure enough, it busted through. So what was the bull case scenario that I mentioned in the morning? I said above 448, what was my next price target? 450 was the first one, then 452 if 450 cleared. Obviously, we always play it level to level. And with 448 clearing, we went straight directly to the next support resistant level of 450. That's the red line right here. Try to break above it. We couldn't hold it. Try to break above it again. Once again, couldn't hold it. Okay? And from that resistance, you could have taken a quick scalp or whatever. You might have been done for the day. I was done for the day at that point. And anyways, let's take a look at the daily chart. Okay, and see what we can expect or what's the plan for tomorrow. Okay, so I got a lot of lines here. All right, but obviously I'm gonna take it out, and I want to bring out the 200-day moving average. Okay, I keep changing the color; it keeps going back to purple. I don't know why, but here it is. That pink line right there, that is the 200-day moving average. Recaptured today. So as of right now, very similar to how we were the other day at this level right here around 458. Okay, We broke above it, but then we failed to hold. We was in a false breakout scenario, and as you can see, it continued to push down. False breakouts are bearish. Now we lost that 200-day moving average, but the very next day failed to hold, and we recaptured it. As you saw in the intraday analysis of SPY on the 15-minute chart, you see how false breakdowns can be bullish. When we lose a critical support level, and then it gets recaptured the very next day. So this is a false breakdown scenario. Usually bullish, okay? Tomorrow we need to see follow through. The 200-day moving average is once again the support for SPY, okay? So as long as above, I'm going to favor we go test some more upside. 450 again. If we break through 450, 451.5 to 452 range, okay? The reason why I'm picking that level is because it's the it's the 20-week moving average on the weekly chart, okay? We'll talk about the weekly chart maybe tomorrow, okay? That zone is the 20-week moving average. And if we clear 452, I'd like to look and see if we test the 453.5 zone again. And if you're wondering what that level is, that's based off my fib levels from the high of January to the low of February. Okay, the 61.8 retracement level is at 453.5. Give it a zone, 453.5 to 454. Okay, if we clear that, I have more price target, more resistance around 456 to 456.5. All right, that served as both support and resistance in the past. And then the big one, 458, where we got this double top, 458. If we break above 458, I'd be more bullish. 465 is in play. Okay, guys, that is the bullish scenario. The bearish scenario is that if SPY does not show follow through tomorrow, meaning if we're back below the 200-day moving average, it's currently at 448. If we're back below the 200-day moving average tomorrow, that's not ideal for bulls. That favors the bears. That is then resistant. And if it rejects, okay, that 50% retracement level at 445.3 to 444.5 may not hold again. And we could actually get a test of the 50-day moving average. I might look to buy some calls at the 50-day moving average if we test that. Okay, if big capitalized I and F, if. Okay, as of right now, we want to watch a follow through. Only get bearish if we're below the 200-day moving average. If we're above the 200-day moving average, I recommend you stay bullish, play it level to level, okay? If you need to know what the price level of resistance level were again, just play the video back, okay? Because it's something else that I do want to talk about. Now, Elliott wave, all right? I've mentioned before that I think that we finish an expanded flat Elliott wave correction, okay? That means this: A, B, C, all right? Excuse me, I did the wrong one. It's down here actually. A, B, C, all right? And then another A, B, C right here. A, B, C. All right, so this was an A wave. A right there. I'll put A right there. This was a B wave. I'll put B right there, okay? Can you guys see that? I hope you guys can see that. All right, so this was A wave. This was B wave. Change it to blue. And then we got C wave. Down here. 1, 2, 3, 4, 5. Okay, the C wave is a 5-wave move to the downside. All right. Now you guys can look it up yourself. This was an expanded flat Elliott wave correction. And now if you guys been watching me for a while, I don't always cover Elliott Wave because I don't really trade based off of Elliott Wave. I trade based off the price action. This is just something that I believe is worth noting. Okay? So remember I told you guys, if you remember the last time I covered Elliott Wave back in early March, I talked about how we finished a correction and we could be going through a new impulsive move to the upside or a new trend. And as you can see here, it aged pretty well. All right. So if this is a new trend, it should start here. This was wave 1. This is wave 2. We're in the middle of wave 3. This could be wave 4. Should be heading into wave 5 soon. Okay. We'll change the color of that to pink. All right. So if my Elliott wave theory is true, we should be in wave 4 or finishing wave 4 and head up to wave 5. If the 200-day moving average holds tomorrow and we clear some resistance starting with that 450, then recapture the 20-week moving average at 451.5-ish, that's going to be a signal for me that we're most likely heading into the 5th wave to the upside. Okay, guys? Now, as you know, this is wave 3 right here. This is wave 4. So I'm going to remove this because within wave 3, there should be 5 waves. Okay, so this is where wave 3 starts. That's wave 1, 2, 3, 4, 5. And then, okay, so that would be wave 3. I'll write it there. 3. Okay, that would be wave 3. I hope you guys not getting confused. I hope you guys are following along. But that would be wave 3. And then here comes wave 4. Now, if you've been studying Elliott Wave, you know wave 4 is an A, B, C move to the downside. Okay? So, the high of wave 1, this is the high of wave 1, is at 441.11. According to the rules, the bottom of wave 4 should not intersect or overlap with the high of wave 1, okay? That 50% retracement level held pretty well based on the fib, and we recaptured the 200-day moving average, all right? As long as the 200-day moving average continue to hold, I'm favoring we go test some resistance level, possibly clear it, all right? And it's possible, if we do that, it's possible that we actually did finish wave 4. And this does look like an ABC wave to the downside. It aligns with the Elliott Wave rules, guys. All right? I know some of you guys aren't fans of Elliott Wave. I'm not a #1 fan of it. But like I said, I think it's worth keeping in mind. All right? Elliott Wave is telling us it's looking bullish right now. April seasonality based on the last 20 years telling us it's looking bullish right now. But we still have to take all that with a grain of salt because price action is #1 indicator. Like I said, above the 200-day moving average, we recaptured it. It needs to hold tomorrow. It's at 448. Above 448, I'm bullish on the SPY. Below 448, I'm bearish on the SPY. Keep it that simple. All right, guys? And here is the VIX. It rejected. You can see that it rejected from the 20-day moving average. That's the yellow line right there. And it failed to close above the 23.6 retracement level. Good news, though. It still didn't lose the 200-day moving average at 20.79. Now, something to keep a watch out for tomorrow. If the VIX loses 20.79 tomorrow, it once again lost the 200-day moving average, and that is very bearish for the VIX. All right? If it still holds above it, it needs to go clear 22.94 resistant. And the 20-day is currently at 23. So it needs to clear that. Above 23 would make the VIX look more bullish. All right. If we lose 20.79, that's the 200-day moving average. The VIX is going to look bearish. A bearish VIX, bullish SPY. Bullish VIX, bearish SPY. Okay, guys. Triple Q here. All right. So it washed below that 38.2 retracement level, 352.64. Managed to recapture it. It bounced right off that 50-day moving average. The orange line right there at 349.3. So it saved it, recaptured 352.64, false breakdown mode, as well with the triple Q, needs follow through tomorrow. The next resistant line for triple Q is currently, well, it closed at 354. Next big one's at 359, I think. Yeah, is at 359.9, and above that 363.4 is back in play. Okay, I would turn back to bearish if we lose the 352.64 level. Puts the 50-day moving average at 349 back in play. Below 349, nice big drop down to the 23.6 retracement level at 339.3. Dow Jones, well, it still failed to close back above the 50% retracement level at 346, okay? But it still found some buying pressure around and closed above the 50-day moving average, okay? So basically for tomorrow, it needs to open, or it needs to close above 346. Above 346, I would be bullish, and that puts 350, the 200-day moving average, back in play, okay? If it loses the 50-day moving average at 343.8, I would be bearish. 340.6 is in play, and then 339.7 around there. Below that level is very bearish, and it would put 334 in play, and then below, would definitely be much more bearish at 325, okay? But anyways, so above 346, bullish. Below 343.8, bearish. All right, anything in between is just chop. IWM, all right, IWM came, the bulls for IWM came very clutch today. You can see that long wick on that red candle, and it, no coincidence where it bounced, okay? Because I got IWM traded in this triangle pattern, and after testing the resistance level of the triangle pattern, you can see that it came all the way down and tested the support where we found some strong buying pressure, okay? And it was also almost a false breakout based on this white trend line from November to January high, okay? So IWM managed to bounce right off that yellow support line and close back above the white trend line, okay? So IWM still looking bullish right now. It just needs to clear that 201.3 resistance level. If it does, I'd be more bullish on it, okay? And it'll put more upside in play. What we got here, the 5 days at 203.6. Okay, so we take out 201.3, 203.6 is back in play, 205.5, and then 209.7 above that. Okay, Apple. So I messed up with this one the other day. I forgot to mention it yesterday, but I thought this was an inside day candle setup. It wasn't. The low of this was 174.44, and this was 174.42. Anyways, I had support at 170. Okay, yesterday it held. Today, once again, it held. As long as above 170, 174.3 is in play, and above 174.3, 177 is back in play. Okay, if Apple can clear 177, it can clear this yellow resistant line, and 182 to 183 zone is back in play. That's the all-time highs, and possibly give us some new all-time highs. All right, so below 170, I'd be more bearish. 168.7 is in play. Then below that is 167. And below 167 would put Apple in false breakout mode. Very bearish, okay? Tesla, well, it came all the way down to our support level, the 61.8 retracement level at 1,036.4. We had a quick wash below it, but it found some buying pressure. There's resistance at the 13-day moving average right now. It's at 1,061.9. So if Tesla can clear the 13-day moving average, it puts the 5-day moving average at 1,080-ish in play. All right, if Tesla can clear the 5-day moving average, 1128 is back in play. Now, if you want to get bearish, wait for 1,036 support level to actually fail, because that will put 972 in play. That's a big drop, okay? But wait for the confirmation. Don't try to call a top. Don't try to call a bottom. All right, guys? And then there's Bitcoin. Had a false breakout mode right now, okay? Because yesterday closed back within the triangle. Today is back testing the breakdown mode. The level, 44K is breakout level of this triangle pattern, okay? False breakout mode right now, back testing that level. If it fails to get above 44K, guys, Bitcoin is just bearish, okay? The only way I would be bullish on it is if it gets back above 44K. All right, guys? So that's all I have for you guys today. Thank you guys so much for watching this video. Remember, guys, family is important, and Uncle Charters loves you.